We're still easing into 2024 with not actually that many things going on. So today we're going to look at one company's earnings that have just come out to see whether UK growth is going to rebound. And then for the trade and takeout, I'm going to explain the reason as to why you need to create your own mental models when trading. But before all that, make sure that you like this video and subscribe to this channel to make sure I'm in your YouTube feed every single day to get the best trading and market information. This chart today, which is the next share price versus UK month-on-month GDP, because although it's not entirely scientific here, there are a couple of correlations that we can see, because Next is one of the UK's largest retail firms. Basically, they have a couple of businesses under their brand, which many people don't really know, but they're huge. They're absolutely huge. They do billions in sales per year, and of course that's from their global brands and global shops as well. But in the UK, they're absolutely massive, and people shop at Next a hell of a lot. But something interesting has kind of come out this morning in terms of Next sales. So it's up 5.6% in the 9 weeks to December the 30th, I believe. Now, if we take a bit of a crude look at month-on-month UK GDP, we can sort of see that every tick up in month-on-month GDP, we see the Next share price goes up as well. Every down tick, it kind of decreases. Here it decreases. Here it decreased. This is the October print, and we can see that basically there's a bit of a correlation between retail doing badly, sales, and the overall GDP picture of the UK. Now, as we all know, the UK's GDP fell quite drastically in October. I think it was down negative 1% on the quarter, but October's number was negative 0.3%. Excuse me. And that was primarily due to there being a very, very wet October in the UK. If we look at the Next share price now, though, leading into December, we can see that it's absolutely gone crazy. Okay. It's rallied from 67.26, which is £67.26, all the way up to £80.82, which is a good 30-odd%. Okay, so this is where we're looking now. We're looking to see if this latest GDP print is actually going to be quite strong. And it seems across the industry that retail sales in the UK have indeed been quite strong. Obviously, Christmas is going to be a bit of a buoy for this. It's going to keep things afloat. But, I personally think that the market is going to really, really like the next UK GDP print. And this should put some pressure on the Bank of England, because the market has been pricing in cuts over the last month or so into next year, or pricing in more cuts and bringing them forward for the Bank of England. Perhaps a strong GDP print will mean that inflation remains a little bit more sticky, and it means that there's going to be a greater chance of those cuts being priced out. Now, what does this mean for sterling? Well, if cuts are being priced out, it means that the likelihood of sterling increasing in value goes up massively. So what we should be looking for then is plays where we're looking at a divergence in interest rates. So we could look at the pound versus Japanese yen, for example. I think that's a fantastic way to look at this if indeed the UK growth number comes out strong. So do pay attention to that. I think it could be a nice, strong play. Today's trading takeout is why you need to have your own mental models built in so that you can recall and organize information in your mind on the fly and be able to make better trading decisions. So you might have seen from that video where I effectively looked at Next sales and said to myself, okay, how might this affect or create a trade coming off the back of it? And it's because you have to think really of human behavior, and you have to create then off of that if and then scenarios in your head to be able to basically make a flow chart of information into an actionable outcome at the end. So if we take it from the top, Next sales are up. Next is one of the biggest retail brands in the UK. If Next sales are up, it means that people are spending. Then that is likely, and then we bring in some probabilistic thinking, some traders thinking, then it is likely that retail sales will be up. If retail sales are up, then growth is up. If growth is up, it means that inflation is likely to be a bit more sticky, and then interest rates are going to also be a bit more sticky. If interest rates are more sticky, the trade is to trade the stickiness of one interest rate versus the looseness of another. So I mentioned the Japanese yen, or it could even be the euro, because I expect those cuts to be priced in more aggressively. And that's how you do it. You just think of these different scenarios and how they might affect key bits of the market to come to a good decision nice and quickly.